Okay, so we're about to start live streaming, so let's be aware of that too. Uh,
Are we live?
yeah, yeah.
Can I start, or we have to wait for the video to play? Hello and welcome to this wonderful. Hello and welcome to this wonderful event. Thanks to Empowered African Youth Foundation, we can all agree that this is the perfect time to learn some investment strategies. My name is Bidemi Adedire, and I am a communications and idea strategist, an upcoming podcaster, and the founder of the Smile Outreach. You are most welcome. Empowered African Youth Foundation is a non-profit organization that has the sole aim of creating the largest network for youth and young entrepreneurs. And today we will be talking about building an investment portfolio with stocks and cryptocurrency. Very quickly, I will be introducing our speakers for the day. And trust me, you're about to have a swell time because we are about to win 2021 financially and making wise decisions with our money. First and foremost is Tolulope Eweniyi. Tolulope is an economist, an investment expert, a forex trader, and a chartered accountant. She is also the founder of Happy Economics blog. Her passion is in helping people plan their personal finances, handle their investment, and make better financial decisions. She enjoys listening and talking about financial topics. Um, I would like to confirm that Tolulope is live. Tolulope, say hi to everyone here.
Hi, thanks for having me.
Hi, welcome. Thank you so much for being here. And next we have Toby Ifabi, an electrical engineer, a financial analyst. And trust me, you will not believe he actually is an electrical engineer because the first thing you see when you see Toby is money. He's also an investment portfolio manager. He's the CEO of Fabs Capital. He's driven to create a ripple of generational wealth. He is dedicated a huge part of his career to creating a system that manages business and generates multiple cash flow and also maximizing their potential and value to the economy. Welcome, Mr. Toby. Hi, Toby. Is Toby here? Oh, okay.
Hi, hello everyone.
Hi. There's feedback the last time we had you, but let's move forward and let's go straight into to the order of the day. Let's talk business, let's talk money, and let's talk investment. Tolu, would like to start with you. Please show us what you have come with.
Okay, so I would have to share my slide.
Perfect.
Yeah, okay. So I want you to enable me so I can share the slide. The
Okay.
host has to enable me. Yeah.
Yes, he does. EOI, please enable Tolu.
Okay. Okay.
All right, you can go ahead.
Mm, okay.
Okay,
Okay. Just a little bit of adjustment. So I need to know everyone can see my slide. Okay.
I can.
Okay.
Toby, please confirm if you can see.
Yes, I can see those slides.
Okay.
Okay.
Just to make it very good. Yes. Yeah.
Okay.
So yeah, good afternoon, everyone. And I'm
Good
excited
afternoon.
to be here, and I can't wait for us to start, our financial journey this 2021. So this 2021, we must make money and we must get as much return as we can for my investment. So today, just like Bidemi said, I will be running you through forex and stocks. So because of the time constraints, you understand, so I will try to give us like an overview of the market, the forex market and the stocks market. So if you are a beginner, this is this is going to be really good for you to actually get started into this market. And if you are like an intermediate trader, you would take, let's say, a lot of things here that would actually push you into making more trades and, of course, taking more risk in the market and, of course, having better returns. And so, before we get into what I have for today, I will be talking about Fox and um, Forex interchangeably because this market is actually this both markets are actually very risky. So I'll be talking about them interchangeably, and of course, if you have questions, if they're like really pressing questions, Bidemi would share the questions with me and I can try to answer. So before we even get down into what we have right now, when you look at the global economy as a whole, the market is so uncertain. And in as much as this market is uncertain, we still want to make investment. Personally, I still want to make investment even though this market is uncertain. And if you actually want to make investment in this market, there is one thing that you need to know. We need to understand the market. We need to understand the market. And for you to understand the market, it means that you need to trade logically. You can't trade with emotion. You need to understand what you're doing. So it means that if you have 1 million at this session, or you have 10,000 naira, or you have 10 million naira, you are in the right place. You can get started in the investment market and start making something. So let's start from the Forex market. So when we look at the Forex market, this market is huge. It's a big market out there. Like as at 2019, on a daily basis, this market is trading an average volume of over 5 to 6 trillion. That's a huge market over there. And that's a market where you can enter, I can enter, anyone can make money. But then when you look at Forex, a lot of people get scared, especially they've heard so many like scary things about the market. But the market is, it's if you don't try something, you won't understand it. And that's why we are here today. So when you think about Forex, foreign exchange, you've traded before, I've traded before. If you walked up to the Aboki guy in the market, try to change your, let's say, a dollar to what naira is right now, you've traded. You understand? If you've gone to the bank and then you try to switch from pounds to euro or from euro to Japanese yen, you've traded. So basically, when you talk about Forex, when you think Forex, you're basically just exchanging one currency to another. And if you want to trade, you can trade various things. So if you want to trade, you have to be trading, a pair of currency. You can't just trade one thing. You're trading pound versus USD. Those you're trading, let's say euro versus USD versus NGN. So of course, when it comes to Forex, you need to know that it has to be a pair and it has to be a currency pair that you understand. For example, now I enjoy trading pound, USD, euro, USD. And why do I do that? Because I have a good understanding of the market. You need to understand the market, you need to understand what you're trading. And when it comes to Forex, anyone can trade. I understand that most of us listening to me right now, we've either spoken to someone to, trade on our behalf or something. It's fine if that's the way you want to go. But when it comes to trading, anyone can. You have central bank. Of course, these are the big players in the market. We have financial institutions, different bank. GT could be trading Forex. You could see Barclays Bank trading Forex, Goldman Sachs trading Forex, Access Bank trading Forex. So basically, you see companies trading. And when companies are trading, you could be, let's say, a manufacturing firm, trying to trade, trying to like switch currencies to know, for raw materials like import and exportation. The point is, we all can trade Forex, and the market is huge. There's enough liquidity to go around. You can trade at any time. You can wake up in the morning, you trade, wake up in the afternoon. So if you want to consider this market as a side gig, it is very important. You can go for it because you can trade at any time. And when you think about the risk, of course, forex market is risky. I'm not going to lie. If you've spoken to someone out there and they told you if you put in $1,000 right now, there's a possibility you lose that $1,000 in seconds, they are probably right. And that's how risky the market can be. the market can be very uncertain, which is understandable. If you're venturing into a new market, if you don't know so much about it, there's a lot of uncertainty around it. And of course, there are also things that are beyond our control. But the point is, if you want to venture into this market, you need to understand what moves the forex market. What moves the forex market is going to help you, is going to enable you understand the market, and then make your investment, and then of course make good returns from it. So when it comes to the market, of course there are the advantages, there are disadvantages, but as far as you have a good broker, and by the way, before you trade forex, you need to be able to trade this forex through a particular broker. And a broker basically is a middle person, someone that takes, you're here, there's the global market, you're investing through the broker takes your money. Like, it's so simple. You understand? The broker is the middle person investing your money for you. So you need to also consider a broker. Like, you need to understand that your broker is such that a broker is liquid. Once you've made your investment, you've made profit of it, you can make sustainable return and you can get access to your return. So that's another thing you need to consider when trading. Having a good broker, speak around, speak to people, ask. You have to research. You need to understand why you're picking this particular broker over another broker. So that's another thing you need to understand. And when it comes to the forex market, yes, it's extremely risky, but the best time to trade in this market is when the market is very volatile. Yeah, volatility. And by when I'm talking about volatility, I'm talking about when you are seeing a lot of price movement. Okay, so let's assume I'm trading maybe Euro USD now, and like I bought Euro. So of course, there are some terms I would also discuss with you about this market. Let's say I bought Euro now and I want to, okay, so because of time constraints, I'm going to try to still take it as slow as possible. So let's just assume that $1 to euro is trading at 1.15382. That's just an assumption. And then I decide to buy at this level 1.15, or rather, let's make it easy. I decide to buy at the level of 1.1500. Do you get? And my view of the market is that, oh, euro is doing well. Last week, euro released a lot of good economic data. And by economic data, I'm talking about like data like employment, data that shows the strength of an economy. And so let's say the European market released this, and then I had a really good view that, okay, you know what, if I buy euro today, I'm going to make money off this currency. And then I decide to do it. But then at a particular time, before I knew it, a data was released, and something came up and the market turned against me. And by the market turning against me means that, like, the market starts going down, and by going down, it's tanking. So I will try to be using some terminologies, because if you're venturing into this market, you need to understand the terminologies when it comes to trading. Okay, so sorry, hold on, let me try to put this on. Sorry. Okay, sorry for that. Okay, so by understanding the terminologies in the market, so you need to know that the market is moving. Like, so if, as I was saying, if euro is moving up, and then I bought euro at 1.500, and then there is a really, really good view that, oh, this currency is going up. Yeah, you tend to buy that currency. And if your currency moves to like about 1.1600, the difference between that level you bought and the level you sold, you've made a spread out of it, and that's your profit. So in the forex market, you need to understand that the market can be very bullish. And by being bullish, it means that the market is like, a lot of people are buying. A lot of people are buying in the market. And if people are buying in the market, the price keeps going up. And if you have a certain view that, okay, you know what, if I buy from this market, the market is going to go up, then you can venture into this market. So that's how the forex market works. And also, if you know that there's a possibility that this currency is going to tank, and by tanking, the currency is going to go lower, which means the currency is going to be bearish. If you want to buy from, if you, at that point, you can sell in the market. Of course, it means that you're selling what you don't have in the market, and then the currency goes down, and at a lower level you tend to buy. So let me use an example. Let's say I'm trading pound USD. You understand? And if you're trading pound USD, it means, let's assume that, I know most of us are, I don't know if you are familiar with what is going on in the United Kingdom right now, the whole Brexit issue, and then something negative comes out. You realize that the pound starts to depreciate, and by depreciate, it means that the currency is weakening. You understand? So if this currency is weakening, it means that at a particular level you can sell, because you have a view that this currency is going to weaken up to a certain level, and then you can buy back at that level. You've made a spread. So yes, what I'm saying might sound a little technical, especially since I'm not like writing on the board or any of these things, but these are the basics you need to understand. And I know some of us can be here and say, oh, can I start trading with 10,000? Can I start trading in the Forex market? Yes, you can start trading in the Forex market with as low as 10,000 naira. It's very possible, depending on the broker you chose. And there's something called leverage. You have 10,000. Depending on the leverage, leverage means how large you can actually trade at a particular time in the market. Like you having 10,000, your broker can give you a leverage of, let's say, 1 to 10, which after this class, I would want us to still go and read more and try to understand and like have a better understanding of what I'm saying. But the point is, a broker can help you can grant you like a bigger leverage, which means with that 10,000, you can still trade as large as 100,000. You understand? So that's how the Forex market is. The Forex market can be for anyone, it can be for both of us, and the market is risky. There was a time I was trading $500, and all I did was I stood up, I went into the sitting room just to pick up something, and by the time I came, the money was gone. But that doesn't mean that I've not also traded and I've also not made enough money. So the market is filled with uncertainties. What you need to do is, if you are trading, you need to understand the market. You need to set your target profits. You need to set your orders, which I will still explain when we get after like I'm done explaining stocks. So that's an overview of the Forex market. And I hope it's a bit explanatory. I will still focus more on it. So before we get into the deeper side of the Forex market, let's move into stocks. Just like the Forex market, stocks are also very, it's also a very risky market. And there was also a data as of 2019. So I'm using 2019 as my reference because that's like the data that is out right now. But then when you look at the stock market, the total market capitalization of this market is about 70.75 trillion US dollars. That's huge. And what do I mean about what am I when I say market capitalization? I'm talking about the worth of companies. So it means that when you put all the companies together in the world, they are worth, as of 2019, they were worth about 70.7 trillion dollars. It just shows you how huge this market is. And if you're trading stocks, especially if you're a beginner here, basically it's like, okay, or let's use something similar. When it's like a piece of a pizza, and you take one out of it. That means you own one out of that pizza. If you take two, you own two pieces out of the pizza. So it's the same thing as the stock market. Stock market is like owning a piece of a company. Feels so good. It's like today you decide to own, it's like you want to buy the shares or stocks of GT Bank. It means that you can comfortably say, oh, okay, yeah, I'm part of the owners of GT Bank, and that's how the stock market is. You understand? You are owning a piece of a company, which means if a company is worth, so a company can be worth, let's say, 7 million shares, and you decide to buy one share. That one share means that you are also like the owner of the GT Bank, which feels really, really good. You understand? So when you're looking at stocks or shares, of course, companies they place values on their stock, or rather, they place value on themselves as a company, and by selling stocks to you, it's a way by which that company is raising money. They're like that. Okay, you know what? We are trying to raise money from the public, but then we want you to own part in return. You are owning part of my company, and then in return, we're going to pay you dividend at a later time, depending on what you're doing. Understand? So let's just assume right now, or rather, as at today, I know GT Bank is trading at 36 to $1. It means that, yeah, if I own one share of GT Bank right now, like that means if I can buy GT Bank at 36 naira, and I've owned like a share of GT Bank. So imagine you want to own like 500 shares of GT Bank. It means you would have to pay 36 naira times 500 just to own that particular part of GT Bank. So now another important question you need to ask yourself as a stock trader is, am I a long-term, or rather, what is my goal when it comes to stocks? Is it going to be a short-term goal or is it a long-term goal? And by that, you're supposed to ask yourself, do I want to be a day-to-day trader, or do I want to be a long-term investor when it comes to stocks? It's very, very important for you to ask yourself. So if you're a day-to-day trader when it comes to stocks, you need to understand the deep basics of this market, because you want to be making money. You want to wake up in the morning, putting your money in these stocks, invest in various companies across the world, you understand? And then before the end of the day, you want to make money. You're waking up by 6 a.m., you're trading just because you want to make money out of it. Or do you want to be a long-term investor? So I'm going to give you an example now. I don't know if any of you know how much Amazon was worth in 1997. Amazon was worth $18 per share in 1997. So just imagine you invested in Amazon in 1997, and let's say you bought like $10,000 worth of stocks from Amazon. And as of today, Amazon is worth $3,350 per share. So I'm going to give you time to multiply that. 3,350 multiplied by 10,000 that you invested in 1997. Guys, it means that right now you will be worth about $33.5 million. And when you are a long-term investor in stocks market, that is how you can gain financial freedom. But the question you also need to ask yourself is, how do you spot these companies? You understand? How do you know that, oh, this company has potential? And that's where the work falls on you. You understand? One, when it comes to that, it could be you asking a fellow person that has been in this market, what do you understand about this firm? I want to order. Maybe I have someone, I'm like, oh, Toby, I want to invest in Tesla's stocks. What do you think? And if Toby is very knowledgeable, then Toby will tell you, oh, this is it. This is why you should invest in. This is why you should buy Tesla stocks. You know, the company is growing. When you look at the company's earnings, current earnings right now, oh, the company is this. Oh, the company has been growing by an average of 50% over the years. So these are things you need to put into consideration. One, you need to know what the news is talking about as regards these firms. You need to be able to look at their financial. You need to be able to do like, okay, you know what? Is this company projected to grow over time? And of course, just like Forex is a risk, there are some companies today you can bet on that, oh, I am 100% sure this company is going to grow. And in the next 5 years, the company drops. And that's where you being very smart about your investment, you having a good investment portfolio, and that's where Toby is going to come in. You understand? So you need to know how you're investing in this market. You need to know how profitable the firm is, the whatever company you want to use. You need to know how profitable the firm is. It's extremely important. So when it comes to stocks, these are things you should know. Stocks market, just like Forex, you and I can trade. You have pension, you have hedge funds, big hedge funds, you have mutual funds, pension funds. Everyone is investing in this market. But then as they are doing that, they are all very, very particular about the market. So another thing about this market is good research. Like I said, if you're a day-to-day trader, it's a way to make money. If you want to invest in for the longest of period, you know, it's another way to make money. So now, what are the risks? Like I said, the market fluctuates. You know, you can decide to invest in this firm today with a very good perspective, and then in 2 years, the firm falls. Those are the risks you have to take. But then if you have enough knowledge, if you are able to speak to people, you understand how the market is, you have a community of people that are also doing the same thing. Let me give you an example of something that happened not too long ago. I'm sure most of us heard about GameStop. Like, so just imagine, like, most people didn't know about GameStop. Of course, other people knew about GameStop. People that knew, so I'm not going to get into the twist about that, but let's just assume that there was a community of people. They knew that, oh, this stock was going high, so most people bought. When, as at December last year, GameStop was trading at 18 dollars per share. That was where it was trading. Right now, it's trading at $63 per share. And towards January, GameStop rose by about 1,700%. That is a crazy margin for stocks to grow. These stocks reach like at least about 320 something dollars per share. So just imagine you have a community of people that have a good understanding. You are joining these communities, you are speaking to people, and that's how good you can trade. And it gives you a better knowledge of your trading. So how can you trade? Like I've been talking, like how can you go about it? You can open a brokerage account, just like Forex. You have a broker, people that you can have access to both your Nigerian stocks, it could be US stocks, it could be UK stocks, it could be German stocks, different companies all over the world. You can own company as far as you understand the firm you're actually investing in. So in Nigeria, you can open Bamboo. I use Bamboo, you understand, to trade, to invest in stocks. You can trade using Chaka.ng. You can use Robinhood. Sorry, hold on. I think I have a chart. Okay, yeah, okay. Okay, so you can use Robinhood, you can use M1 Finance. There are so many brokers out there, you understand? And then you can just trade through these people. So what do you do? How do you even start trading? One, open your brokerage account, know the amount you want to set aside. Remember I said investing in these markets is actually a very huge risk. So you need to know that, okay, you know what? Out of my investment money, let's say you have 1 million to invest. Okay, you know what? 200K should go into stocks. 100K should go into Forex. You should do something like that. Learn your orders, which I will still talk about. And another important thing is before you get into this market, you need to trade virtually. Very important. You have to understand that you need to trade virtually. You shouldn't just jump into the market. If you're new to this market, if you're a beginner, trade virtually so that you can have a good grasp of this market. If you're an intermediate trader, what you need to do is try to pick up more points, understand what moves this market before you actually venture into it. And so now, the most important thing of this session, I'm sure you all understand like a bit of an overview of these two markets, but then what moves these markets is extremely important, because what moves the market will determine whether you should venture into that market or whether you should take a particular trade or a particular position when you're trading Forex, or you should buy the shares of this company when you're trading stocks. Like I said, I've already talked about the stocks. What moves the market? One, the earnings of those companies. If there is a news that this company is profitable, you can see that the growth of this company has been consistent over a period of 5 to 10 years. Why not? That's a good move. That is going to move the market. Then the news, of course, news moves market. You need to pay attention to news reports. You need to pay attention to market sentiments. Like, you've heard when, let's say, okay, let's even talk about, cryptos. I'm just going to venture a little bit just for you to have a good understanding. When Elon Musk approves a particular type of crypto, what happens? A lot of people are buying into that. So just the same thing, when someone says that, oh, this firm is going to grow by 50% next year, and you can see the market is moving towards that direction, you can quickly buy the shares of that company, because there's a possibility that these shares goes up, and then you are able to sell if you're a day-to-day trader, or if the shares of this company eventually keeps rising. As a long-term investor, you are actually building your financial freedom. You understand? You are going to be financially independent, because at that point, you have been able to spot a good market. So exactly, that's what moves the market. And of course, what I've been explaining since, supply and demand. I was talking to someone yesterday, and the person was asking me, how does supply and demand move the stocks market? It does. When so many people are buying a particular thing, are demanding for a particular thing, what happens? The price shoots up. And that's another thing you need to pay attention to. You need to know how many people are venturing, into that market, how many people are buying it, what is moving it, and that's for the stock market. For the forex market, the central banks. When I was explaining before, I told you that these central banks are the big players, the big boys. That's what they call them. They move the market. A decision they will make today can drive the market. I know most of us have been hearing about, oh, something depreciating, something appreciating. When a currency depreciates, it means that the currency is weakening. When a currency like appreciates, the currency is getting stronger. You understand? So if the central bank decide that, oh, okay, myself, I'm going to depreciate my currency, it's going to weaken, what do you think investors are going to do? They will start selling that currency. What do you think will happen to that currency when you're trading? The currency tanks. So at that point, you know that, okay, you know what? I'm not going to buy I'm not going to buy this particular currency. Instead, I'm going to sell it. And when it has gone lower, I'm going to buy it, and then you make your spread. So central banks move the market. News and report, like I said, extremely important. The news market, like what is going on, the analysis of other like forex traders all over the world, they move the market. And if you want to venture into forex market, you can always read different analyses um on forex, what they call the FX Street, fxstreet.com. FX Street has a lot of traders all over the world, making their own comments and then just trying to analyze the market. You can read it. A good trader, even though you have a good perspective, even if you're trading stocks or forex, as far as you are, even if you have a good perspective, it's always very important to understand the perspective of another trader. You understand? That doesn't mean you would let yours down, but when you understand that, you are able to know, okay, is this trader pointing you towards this direction? Are you guys on the same direction? It's very important to know. Market sentiment. What is the market thinking? Sometimes if the market is going bullish, like everybody wants to buy something, sometimes it's good to always also go to that direction. But then, of course, if you have a good, understanding, you can maintain your own. Then economic data. When it comes to the forex market, this is a big mover. So first of all, before I am going to explain economic data, if you want to get economic data of different countries, when you're trading currencies, you can go to Forex Factory, forexfactory.com. Very important. I hope someone is typing into the comment section for the listeners. Forexfactory.com. Forex Factory will give you the different economic data every day. These are the things that moves the currency. For example, now let's say in the United Kingdom, there is a data was released and it says employment is rising, like employment data is rising, which means that the country is strengthening. People are getting more employed, which means that which means that companies are doing well. You understand? Like more people are getting employed, or there's a data that says the earnings of the different companies in that particular firm is good. It shows that companies are doing well. So at that point, what would you do as an investor? You want to invest in you want to invest in that country as much as possible. And if you want to invest in that country, what do? You start getting currencies of that country. And it just shows you that this data, they drive the market. Let's come down to Nigeria. We've all seen how the Nigerian market is very uncertain, interest is going lower, everything, and all of a sudden they're telling you that treasury bills or OMO bills is 18%. What do you think investors outside the what they call it, outside the country will do? They want to invest, but one thing you need to know is that if you are a foreign investor and you want to invest in Nigeria, you need to change your money into the Nigerian currency. That's naira, which means that even if you have dollar, you need to request for naira before you can invest in the Nigerian treasury bills. And what is it doing? And just imagine, like, a whole lot of people are investing in treasury bills. That means a whole lot of people are demanding for the naira. What happens? The naira appreciates, and that's how your currency becomes stronger. So these are the particular things that actually drive currency. It's very important, like especially the US dollar. Today you would see that a data is being released, it makes the dollar super strong compared to where it has been, let's say, like maybe 3-4 days ago. So these are the things you need to pay attention to. Credit ratings, very important, especially for stocks. How is it important? Let's just assume that, credit rating means that you're rating a company, whether a company is doing well, whether a company is credit worthy. You understand? And then all of a sudden someone comes and tells you that, okay, you know what, GameStop is AAA, meaning that it's like it has the highest credit rating. What do you think investors will do? Everyone wants to buy into the shares. So if you understand that this company has been rated well, you too know that that is another pointer for you to invest. So these are the things that drive the market. Once you have a good understanding of what drives the market, then it guides your direction as to how you can trade. There's something called sentiment analysis. This is basically when you're just thinking of what the whole market is doing. This is not even on you. Sometimes you can see like half of the world is going this way, trying to invest in this particular thing. This is what you need to do. Like you try to, maybe you can join them or then you can stick to your perspective. But sentiment analysis does work. Trying to understand what the other parties across the world are doing. Technical analysis. This is something that is deeper, and this is something that will take a whole session. So I'm expecting, this the Empowered African Youth Foundation to have another class. But technical analysis basically is you understand. I know most of you have seen people when they are trading for it, you see all those screens, you see all those candlesticks, all those graphs, and you're like, what is going on? That's where technical analysis comes in. You understand? You are trying to see, you are trying to train, trying to go back in time, trying to see how these things have performed over time. That also moves the stocks and the forex markets. So those are things you need to know. Those are things you need to learn. And if you want to basically understand this more, it's not just about listening to what I'm saying, which is really good. You should also go back to study, read books, read forex trading for dummies, read forex trading for stocks. I did that to get where I am today. You understand? You need to have, like, talk to people, like, have experience. And another important thing you need to do is trade with a demo account. You need to trade virtually. Don't use your personal money to start trading when you're new to it. Even sometimes, if you understand something, you need to actually, understand how to go about it. Like, you need to have been able to risk some certain things when you're trading the virtual currency. Trade virtually, understand how to trade with virtual currencies. And the thing about virtual currency, it gives you room to trade with as high as $1 million. So it feels good. You understand you're trying to trade with currencies, and it's like market stimulation. You are trading exactly how the market is trading. You understand? But then you are trading virtually. You get to understand what the market is saying. So to understand the forex chart, understand the stocks chart, you need to understand how the market is trading. Trade virtually is extremely important. And I I really hope that you've been able to get something out of this. But before I leave, when you're done trading virtually and you want to enter into the market, it's good to trade small. Because you have $1 million to invest, or let's come down to our level. Let's say you have about 1 million or 500,000 to invest in this market. Doesn't mean you should just carry the money and just drop it. Boom. No, you can divide it. You can put it in portion. Okay, put in 100,000 naira first, trade with it, see how it is, see how the real market is. Sometimes it's easier to trade with virtual currency and everything is going good, and when you start trading with your money, there's this fear that comes with it because it's your money. You don't want to lose it. But trade small so that you can reduce your risk exposure. Extremely important. Trade with stops. I said I was going to come there. So when you're trading, especially when you're trading with virtual currency, you get to learn this thing. You need to set your stop loss. You need to set your target profit. So it's like this: you want to trade, and then let's say Euro USD is trading at 1.1500, and then you are so sure, your perspective is so sure that what, this market is going to go to as high as 1.600. But then on the other end, you don't want to risk it. So you feel like you don't want to risk it. If it goes lower, you don't want to lose your entire money. There's a particular percent. Let's say you just want to lose at least 10% of your money, even if the euro doesn't go according to your perspective. So what you can do is you can set a stop loss. Let's say 1.500 now. You can say, okay, if it gets to 1.4500, close my trade, because you don't want to lose your money. You don't want it going lower than that. Or you can also set target profit that, okay, or since your target is 1.600, you want to make, like, let's say, like one what do you call it, 100 pips out of it, or 100% out of that particular thing. You can set a target profit that, oh, you know what, my system, when it gets to 1.600, take the money, and then you make your money. Also, another thing is you can even set orders. Let's say you know that okay, this thing is going, you know that this currency in the next 2 3 days, this currency is going to go as low as 1.1400, but you don't know when it's going to happen. You can set an order that okay, you know what, I want this my platform, your like your trading platform, to automatically buy at that level when it gets there. So that's how you need to learn to trade with stops, and you need to learn to trade with orders. So how would you have a better understanding of this when you start trading with a demo account, which is extremely important? And the third thing I want to do, you have to learn to trade. Learn to trade with your demo. Learn to trade from experience. That's your demo. You need to understand to trade from experience, and then you can also learn from books. So sometimes when you're reading, you see some certain techniques that different strategies that different traders have done, and then you understand it. And I really hope you understand. So yeah, I'm done with this, and I hope we're able to like grasp something within this 40 minutes. I'm sure I spent more than my time, but I hope I'm able to cover it. Thank you.
Thank you. Thank you so much, Tolu. Thank you so much. That was an amazing presentation. But I, for one, think we need to come back and talk more about this.
Yeah.
There was a lot to
Yeah.
understand. It feels like we need to have a degree in it.
Yes. Yes.
Okay. Yes. I was taking note of some things, and you said the first thing with stocks is opening a brokerage account, determine what platform you want to use, if it's Bamboo, if it's Robinhood. So
Yeah.
after that, what is the next step for more like, I want it to look like an action plan for people, for listeners. So
Okay.
number one, do this, number two, do this, number three, do this, and stuff like that.
Okay. Okay, so that's actually a really good question. So like I said, once you open, let's say you decide to open, with Bamboo. Let's say you assume you pick Bamboo as
Mm-hmm.
your what do you call it, your brokerage firm that you want to use to start trade.
Yes.
I think the next thing is then you need to set a target, like I said, how much do I want to be trading? You understand? Like, I said,
Okay.
let's assume that you have 500,000 in your account, or let's come to as low as 100,000, and you want to trade, let's say, 50,000 out of it. You understand? You need to set a trading budget. Like, okay, this is the money I know that because I'm new to this. This is the money I know I can put that even if anything happens. If you're new to something, we all know that the risk is high, but we all know that with proper knowledge and experience,
Yes.
we are going to, reduce the risk as much as possible and make a return. So you'd be like that, okay, 50,000, I can put in that. Something that will not give me heart attack. You understand? You're putting it there. Then what's the next thing? You need to know the firms you want to invest in. You've already opened a brokerage account. You already have the money.
Mm.
So now the question is, which firms are you going to invest in? Extremely important. You understand? Do you want to invest in GT? Do you want to invest in Tesla? Is it Apple? Is it Amazon? Do you get? So you need to have a good understanding of the firms. And then if you are able to pick that, you can even share your 50,000 across three firms. You understand? Is it Alibaba? Is it Access Bank? Is it Dangote? As of today, I think Dangote is trading at 230 naira to one share. You understand? So that means that, let's say you want to now, like, okay, let's say you have 50,000 and you want to invest in Dangote. Dangote is a firm that you and I know that will continue to exist. You understand? It has a solid foundation. So let's say you have 50,000. We can all get our calculators. So 50,000 divided by 230 naira, you can buy about 217 shares in Dangote. And that's something. You started trading. Like, you already have an investment that would grow. And when your money increases, you keep adding to it. You understand? So that is how you can trade. And then another thing I said is, if you're not so certain, at that level, when you know that, okay, you want to buy the shares in Dangote, let's say there are other companies that are just starting that you want to trade in, you can, you can try to practice with virtual trading. I don't know, I was going to say something. Last year, we know with the way COVID affected, you saw that the share price of different firms went down, and you realized that the share prices of pharmaceutical firms started going up. That period would have been a good period for you to see, okay, you know what? Hmm, well, we are looking at what this we have been a good period to have like a better analysis, a good analysis. Okay, you know what? these firms are trading at this level, their share price went down, will they go up? If this firm develops a vaccine, what will happen to the share price? Everyone wants to invest in it because this company will literally be like the Superman of the world. Do you understand? So these are things you need to know. Open a brokerage account. You understand? Like, set aside a particular money, know the firms you want to invest in, have a good analysis of the market, practice virtually, and most importantly, if you have a good perspective of the market, stick to it, even though you're also listening to other traders. You understand? Yeah.
Thank you so much. Viewers out there, we've had an amazing session with Tolu, and we're about to go deeper into understanding what it means to have a financial portfolio. And our amazing speaker is here ready and to dish out all of his strong, beautiful ideas. And but is Toby here? Toby, it's time. Let's hear from you. Come teach us what it means to, talk more about stocks, yes, but we're looking at real estate ETF as well, and financial portfolio as a whole. Hi, Toby.
Hi, can you hear me?
Yes.
Can you see my screen?
Great.
Okay. Can you see my screen? Hi, no.
Yes.
Yeah, so I'm just going to take things a little bit further from where Tolu stopped, right? You notice that at the end of her session, she talked about, apportioning or allocating how much it is that you want to invest in, knowing where you're going to put those things in, and, understanding what your view is about the market and sticking to it. So, firstly, we're going to look at what is the portfolio approach. Okay. Now, traditionally, you can invest individually in stocks or in securities, and you can analyze them on their own and make a decision if you want to buy them or not. Now, a better way is the portfolio approach, which means that if you pick a certain security, right? So let's say this is your portfolio, and in your portfolio, you have different things in it. You have some bonds, you have some stocks, you have your brokerage accounts where you're trading Forex, you probably have some real estate investment trusts, right? So this as a whole is your portfolio. Okay, now the portfolio approach means that if I now want to look at a specific stock, right? I am not going to analyze this stock in isolation. What I would do is I would analyze the stock or the investment opportunity with respect to my overall portfolio. So what I want to ask myself is, if I add this to my portfolio, what does it do to it? Does it increase my risk? Does it reduce my risk? Does it increase my return? So pretty much that is the portfolio approach, and it's a smart way to invest to ensure that you understand the relationship between the things that are in your portfolio. So I'm going to walk us through a simple framework for how you can, at the end of this call, go ahead and build your investment portfolio, right? And it starts with planning. While you're planning, what you have to ask yourself is this: what are my investment objectives? So your investment objectives could be that your investment goals and your investment objectives, actually. Or rather, so that this is be more clear, this would be your financial goals, and this would be your investment objectives. So your financial goals, you want to ask yourself, why am I trying to grow money? Like Tolu said, the very reason why you're investing is you want to take money that's you have now, move it to the future and let it increase. So why do you want to do that? Are you trying to stack up money for a trip you have at the end of the year? Are you working towards buying a house? Are you trying to change your phone to the 12 Pro X Max, right? So you need to start from your financial goals? What is your motivation? And then next, you need to look at your investment objectives. Now, dealing with your investment objectives, it's smart to ask yourself, at what phase am I in my investment journey? Okay. Am I in an asset accumulation phase, or am I in a wealth preservation phase? Right. So we're going to talk more about that as we go down the session. But these are the first things that you need to do in your planning. Next question that you need to ask yourself, right? What assets do I have access to invest in? Okay, so assets could be a brokerage account where you can trade Forex, your stocks brokerage accounts, real estate investment trusts, bonds, and even commodities like gold, right? So we're going to talk more about these asset classes with respect to how they impact your risk and your return. But that's the next question you need to ask yourself. And while you're looking at assets, lastly, you need to ask yourself, what assets do I understand? And asking yourself what assets you understand is what would enable you monitor the performance of these assets. Because if you don't understand something, for instance, if you go on Twitter and you're most likely going to see somebody say, "Oh, I bought Bitcoin, and the day I bought Bitcoin, like it went down in value," and things like that, right? So you need to understand the assets that you're investing in, understand how they behave, right? And that is your planning phase. Once you're done planning, asking yourself these questions, you would have a self-report that would probably sound like this. So I am Toby, and I am 16 years old, and I am in the asset accumulation phase because I have a lot of years ahead of me. I understand cryptocurrencies. I also know that I can access real estate investment trusts, and I believe that the stock market could do well in the coming years, right? So you have talked about, and my financial goal is to buy an iPhone 12 Pro Max by July. So I have my financial goal, I have my objective, I understand the phase of my investment journey that I am in. I know the assets that I understand, and I know the other assets that I also have access to. Now, second step is execution. And I'm going to try and take things a bit slowly here because this is really where the juice is. So in my execution phase, I already know that I am in an asset accumulation phase. So if I am in an asset accumulation phase, my priority should be to stack up as much as I can so that I can have a robust portfolio. Because here's the thing, 10% of, let's say $1,000, right? Is what? That's $100. But 1% of $100,000 portfolio is what? That's $1,000. So it is important that in your investment journey, when you start out, your priority should not be getting high returns. Your priority should be stacking up your portfolio. And that's the mistake most persons make. They try to find very high gaining assets and jump into it. And like when they burn out, they're like, yo, this investment journey is not for me. It's not for me. I'm not interested anymore. And then they just stop. So that's one key takeaway that you need to leave this webinar with. While you're starting the investment journey, your priority should be stacking up your money so you have a robust assets under management and not looking for high returns. So we know we're in our asset accumulation phase. Now, the next thing you have to ask yourself in your execution step is, what kind of risk am I comfortable with, and what kind of return am I looking for? So we spoke about assets prior to this point, and I'm just going to take each one and quickly run through how their risk and return differs. So let's start with stocks that Tolu spoke about. Stocks, which are equities, right? Meaning you're giving a company your money for them to conduct business, and when their businesses do well, they give you dividends and the value increases in price. Now, the risk for stocks is high. It's high up there, like Tolu mentioned. But the return as well is really great. And this is popular news that they had the return, they had the risk, they had the return, and vice versa, right? So assets like stocks, you need to understand where they lie in your risk versus return decisions. Real estate, for instance, okay, the risk of real estate is quite minimal. And the great thing about real estate is real estate appreciates with inflation. As prices of things in the markets go up, most often than not, landlords will increase their rents, and the value of land and the cash flows that you get from renting also goes up, right? So real estate serves as a great hedge for inflation, right? So here, the return may not be as high as stocks, but you know that the risk is not as high as stocks, right? Now, looking down into other things like commodities, right, like gold, okay? Now, another question you need to ask yourself, another thing you need to be aware of is that there are two kinds of return. You can have return from holding an asset, and you can have return from an asset that gives you income. Real estate is an asset that gives you income. Real estate would also give you holding return. So you buy a house at 20 million naira, and next 5 years, the value of that house is now 25 million naira. But in the period of 5 years, you were collecting rent because you put the house up for rent. So the increase from that 20 million to 25 million, that is your holding return. You didn't have to do anything, but you got that just because price appreciated. And the 500K rent that you get monthly from it, or yearly from it, that is your income return. So not all the assets would give you both or give you just one. There are stocks that pay dividends and there are stocks that do not. I'm going to talk about that as well before the end of the session. But what you need to take away from this point is that while you're in your execution phase, after you've understood where you are in your investment journey, what your goals are, your objectives are, you need to be conscious of and ask yourself, what kind of return am I going to get from this asset? Is it the return that are they the returns that I want? Does it offer risk that I can tolerate? Those are questions that you need to ask yourself in your execution phase. And lastly, in our framework for building your investment portfolio is your feedback phase. All you do here is monitor. Because you set goals and objectives while we started, right? At each point of your journey, you can evaluate, okay, this asset, how is it performing, right? Is it performing as well as I would want it to perform? Is the economy in a recession and that's why it's not working well, right? So here, and this also applies to, Tolu spoke about speaking to other traders to find their sentiments about the market, right? And I believe that you shouldn't just do that for like forex trading and like stocks trading, right? It cuts across everything. Talk to persons about country economics. Talk to persons about businesses, right? Get acquainted with GDP news releases for economies and understand where you lie, where your investments lie and how they're performing. Understand why they're performing the way they are performing. So all of these are things that you do in your feedback stage. Now that we have a framework for our investment portfolio, okay, there are a couple of things that ideals that you need to be aware of and have at your fingertips. These are the things that would make your investment journey very smooth. I'm just going to put a heading to that. Things you need to make your journey smooth. Number one, you have to, there's no way around it. You have to understand how compounding works. Simply put, compounding is when your money makes money, and the money that your money makes you more money. I'm going to say that again. When your money makes you more money, and the money that your money made then makes you more money. This is why you must have heard stories of two persons who invested different amounts consistently for a number of years. One started at age 20, another started at age 30, but the person that started at age 20 invested less money than the person that started at age 30. But eventually, the person who started at age 20 had a larger portfolio value at the end of the day. Compounding is known as the snowball effect, right? So if this is a mountain, right, or a cliff, and a ball is falling down here, let's just say this is a smooth mountain, and the ball is falling down here, okay? Because this mountain is high up here, it's gonna fall with so much speed, so much energy, compared to someone else whose mountain is here. So that's what happens with compounding. And what you need to do is you need to start early. You need to start early. The best time for you to start investing is yesterday, because time is not going to wait for anybody and opportunities are going to keep passing you by. But just understand that if you're focused on stacking your paper, not really looking for high returns, over time, because the market always rewards risk over a period. You don't need to chase the market. You don't need to get all your investments right. If you follow a framework, follow a laid down strategy, and keep at it, be consistent with it, time will pay you well for it. Starting early is really, really, really important. And while you're starting, you remember you're in your asset accumulation phase, and that's what you should focus on. Second thing that would make your investment journey smooth is a question that I get all the time. So persons always ask, Toby, I have some debts. Should I finish paying off my debts before I start investing? I'm owing this money, I'm owing that money. I just want to focus on it. That's why I've not had money to invest, right? I get that question a lot. And this is my response to it. All debt isn't equal, right? And you shouldn't treat all debts like they are the same. If we were to categorize debts into two categories, you find out that on one hand, you have debts that doesn't have any productive function, that has high interest rates, and is really just not, and it depletes your cash flow every single time. So you get money, you get some income there, your salary of your business, and like, yeah, that debt takes it off, depleting your cash flow strength. And on the other hand, you have, and for that, I'm going to give an example. Say consumer debts. We don't have a lot of those in Nigeria, right? But consumer debts where you are leveraging on an organization, paying for something that you will now pay for at the end of the day. But on the other hand, you have debt that has productive use for you. Say things like your mortgage. Okay, you borrowed money from the bank to buy a house, and they are taking that money from you every month. Okay, so I'm not going to give you an answer that says explicitly that you should either finish paying off your debts before investing, or you should just invest regardless and not pay off your debts. It is an amazing financial goal to be debt-free, and I am telling you this from experience as someone who has been in debt of thousands of dollars, how you feel when you're debt free. It's only when you're debt free that you really know how much money that you are making. But understand that all debt isn't equal, and you have to find a balance. Because if you spend 2 years throwing all your income at a debt that you've incurred, that's a lot of time that you are missing out on, as we can see from our snowball illustration, right? So understanding debt versus investment decisions is super important in making your journey smooth. Third thing that you need to understand is, how do I actually go ahead now and start building my portfolio, right? So say I have 10,000 naira now, I have 50,000 naira, 500,000 naira, or a million, like, my madam at the top, Tolu, was referencing. Whatever amounts that you have, it is absolutely foolish to just throw everything at the market one time in one day. This is why. This is how the market moves. The market never moves like this. If it's going to go, okay, you're going to see a lot of fluctuations with the market. And let's say this is an asset that you know for sure, you believe in its economic value, and you believe that it is going to increase in value over the years. For instance, let's say Bitcoin, right? You believe that in the future, we're not going to use printed money anymore. Everything is going to be digital, payments are going to be digital, and this asset has economic value. Now, obviously at this point, you can't see the rest of the chart. Let's say this is the day. So if you just carried your 500K and just bought at this point, and price goes up, you're feeling like, yes, man, I made like a nice move. And then like you see price fall down here, you're going to feel very stupid for having spent all your money yesterday on buying that asset. So one key idea you need to know that would make your investment journey smooth is dollar cost averaging. So basically, dollar cost averaging means that in periodic intervals, you are taking a certain amount of your money. You have 500K to invest. So in periodic intervals, you are taking a little bit of this amount and you are buying the assets. So you buy at this point, 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 you buy at this point. Now, what this does for you is this: number one, you don't have to worry about the asset price fluctuation. And number two, by the time you buy periodically at different prices, you will find out that at the end of the day, when you average all the times that you bought, accumulating to this your 500K, the price at which you bought it would probably on average be somewhere like here. So you're better off than the person who spent all their money buying it at this point, or buying it at this point, or buying it at this point. And remember, while you are here, you cannot know what is going to happen. But what is certain is that price never moves in a straight line. This is going to happen. You should expect this. And I think lastly, the last point that you need to be aware of is how to use cash. Everyone will tell you that cash is trash. Cash doesn't add any interest for you. Keeping money in the bank doesn't do anything for you, and blah, blah. I agree 100%. Even billionaire hedge fund manager Ray Dalio says cash is trash. In his words, he says it, that cash is trash. But I don't want us to just take this thing and take what social media is telling you and not always have cash at hand. This is why. And this is what you need cash for. Your portfolio, like I said, is not going to move in a straight line, right? It's going to go up, it's going to go down. Why you need cash is so that you can always buy the dip. The dip is when price momentarily corrects down. So the market moves like this. The market moves the way we breathe in and out. So if you breathe in, everybody breathe in with me, okay? Breathe in and breathe out. Now you find out that there's only as long as you can breathe in for. If I breathe in, I need to breathe out at some point. The market is breathing in whenever it is pushing, okay? When the market is pushing up, it is going to get exhausted and it is going to correct, okay? So these are the times where you need cash. So you shouldn't be that person who is sad when Bitcoin is dropping down in value or when Ethereum is dropping down in value. When you hear the value is going down, yes, you should be excited because now that is time that you can buy the dip. So cash really isn't trash. That is the point I am trying to make. It is important for you to always keep cash at hand because opportunities will pop up in the market. All right. So just to give a quick recap of everything that we've spoken about, we are trying to create a framework for us to build our financial portfolio. And we start with describing what our financial goals are and what our investment objectives are. What are you trying to save up for? What are you trying to raise cash for? What are your objectives? Are you accumulating assets or are you in the wealth preservation phase, which most persons in their 40s, 50s, 60s are in? Next, we talked about the steps that you would take in building your investment portfolio, starting from your planning to your execution to your feedback stage. With your planning stage, you are describing your investment universe. Your investment universe is all the assets that you have access to. You are also going to document which assets you understand, which ones provide returns that you want. Are they going to give you holding returns or are they going to give you income returns? What is their risk profile? Are they things that go up in value when the economy is in a downturn? Or are they things that go down in value when the economy is in a downturn? And then you can move on to deciding on how you want to allocate your assets. But like we said, while you're starting off, focus more on increasing your starting capital, your portfolio value, and do it in little bits consistently over time using the dollar averaging strategy. Also, don't be in debt because it's going to keep eating up your gains, eating up your cash flow, and cash flow is king in this game. It's better for you to be getting periodic cash flows that are consistent than just be uncertain about money that could come in the future. And lastly, understand the power of compounding. And to really get into the gains of compounding, you have to start early. Start today. If you're not going to start today, start yesterday. Those are the only two options I have for you. Don't start tomorrow. Tolu talked about a lot of apps that you can use from today to start getting into your investment journey, things that you can use to buy stocks, and picking a broker for your Forex journey is your decision to make. Tolu pointed out some facts or some pointers that would help us with that. And lastly, I'm just going to say one thing that I've learned in my investment journey. The masses are never, ever, ever, ever right. Okay. Fear of missing out is what causes persons to chase markets, to chase trends. Understand that by the time the news goes viral, persons who would have profited from those movements have already profited from it. So what you need to do now is to train your eye, immerse yourself in the information, research about things, okay, and surround yourself with a community of persons who are involved in what you're trying to get involved with, right? Always try to get people's feedback on things, understand other person's sentiments about asset prices and about asset movements. And really, setting up your portfolio is a very straightforward journey. So just to wrap up, to buttress some points that Tolu made about stocks, okay? Two things. How can you pick a winning stock? That's always the question. Toby, which stock should I buy? Which stocks are going to make me money in 2 years? Which stocks are going to make me money in 5 years? There is only one thing that is guaranteed in this game, which is that in your lifetime, you're going to make some asset choices that are going to be bad. But if you understand risk and understand that not taking any risk is the biggest risk of all, and start small, like Tolu said, start small. Don't just take all your coins and throw it at the market in one go, right? Even if you don't have money to invest, you can invest in yourself. I learned that from one of Tolu's webinars. If you don't have money to invest in the stock market, in the forex market, invest in yourself, buy books, jump on webinars like this often, learn more and more as you can about your investment journey and about building a portfolio, right? So speaking about stocks, one key thing you need to know at this level is that they are defensive stocks and they are growth stocks, right? So defensive stocks, these are very mature companies, things like Coca-Cola. And for growth stocks, these are still in their growth stage, as the name implies. Companies like Tesla, okay? Now, some persons on the internet will tell you, if you're young, only invest in growth stocks. And if you're old, only invest in like defensive stocks. You need to find a balance with it. Because this is what happens, right? When an economy is in a recession, right? It's doing well here, it's down. When it is at this point, only these guys do very well. Because these are very mature companies, right? So, and you're never going to know what's going to happen. Nobody saw the economic recession that broke out last year coming. Nobody did. So you need to have a balance with like the defensive stocks and your growth stocks, right? So think about it like this. A team is only complete when they have good attackers that can score goals and they have good defenders that can keep them from getting scored. So that wraps up my session. I hope this has been helpful, and there are many more webinars like this coming from the AYF platform. Make sure to hit the subscribe button, and I wish you success in your investment journey. Start small, learn more, and just grow. Thank you.
Thank you so much, Toby. Thank you so much. This has been an amazing journey, and I'm sure a lot of questions have been answered already. But here is a question that you might want to answer, Toby. Someone is asking, how do you invest in real estate investment trusts, just the way one can invest in stocks using apps? Did
Okay,
you get
so
that?
yes, I got that.
Okay.
Just for the benefit of other persons on the call, right? Real estate investment trusts, they're kind of stocks, right? So for a stock, you're buying a portion of a company, and if that company does well, right, you can partake in those gains. So for real estate investment trusts, if you don't have the money to buy real estate property, okay, there are companies who already own properties and who have securitized them in such a way that there are small chunks that individuals can invest in. So those are real estate investment trusts. Now, for how you can go ahead to invest in real estate investment trusts in Nigeria, there are a number of ETFs that exist in Nigeria. I don't have them at the top of my head. Probably we're going to drop them in the comment section at the end of the call. but I will drop one or two real estate investment trusts that are regulated and verified, and you can start enjoying gains on the real estate in the real estate industry without having a chunk of money to buy real estate.
Thank you. Thank you so much, Toby. Uh, I'd like to say there's a brief announcement. Due to the ban, we've decided to remove the cryptocurrency aspect of this presentation, of this actual webinar, considering what's happening in the country. However, the slides will be shared for everyone to, if they still want to study and understand how cryptocurrency works, these slides will be shared with you. Thank you so much. I believe this will be. Are there any questions, comments, and questions from the audience? Let me go on YouTube to check that out now. Okay. None. All right then. Tolu? Is Tolu still here? Okay. So now that we've gotten to this point, I'd like to say a very big thank you to everyone that is watching, everyone that has attended, everyone who has said one or two things here, and in Zoom, here on Zoom, and also in our live chat. Okay, I'm going through the live chat. I'm not seeing any questions yet. And I want to believe we all understand what it means to have a financial portfolio. Thank you so much, guys, for listening. And this should mark the end of this session. I really do hope that Empowered African Youth Foundation decides to come up with another program like this. We can go deeper, we can go better. Maybe there should be a part two. Tolu, what do you think about this? Toby?
Oh, of course. I think there should definitely be a part two because there is so much to learn when it comes to stocks, forex, cryptocurrency. Yeah. So yes.
Yes. Toby, please tell us more about your person as a financial, as a portfolio manager, what you do and your company. Let us get to understand your company as well.
Okay, so I'm the portfolio manager for Fabs Capital Limited. It is a boutique financial firm, and primarily our objective is to help persons who are or who want to be intentional about their finances and stack up their paper. So we have a variety of products ranging from financial advisory to fixed deposit savings. But I should mention on the call that we are not SEC regulated yet, right? That is still in the works. So we are really just focused on helping persons, build their portfolio on their own, teach them what they need to know to add assets to their portfolio, teach them how to understand companies and pick stocks and that sort of thing. So that is what I do.
Thank you very much. Tolu, if we were to reach you to learn more about what you do, and probably someone needs assistance in understanding the stock market and forex trading, how do we reach you? Tolu? Okay, just so you know, I would like to hear from you. What do you think about this webinar? What have you learned? We'd like to get your feedback. So please, it should come up on the screen now. Okay, we want your feedback. Kindly scan the barcode and then, yes, so you can access the form. Let us know what you think of this webinar. Your feedback gives us an insight into how webinars should look like from henceforth and the direction we should take. You can probably tell us what you would like to learn in the future as well. Thank you so much for your time, everyone. And I hope to be here as well. I've had an amazing session. Do well to follow us on our social media platforms as well. We are on Instagram, we are on Twitter, we are on LinkedIn, and please subscribe to our YouTube channel. You can also go back to some of the webinars we have done, watch and learn. we need to do this now, especially when it comes to financial literacy. This is the time to learn. As Toby said, the best time to start investment was yesterday, so you're late already. Thank you so much for giving us your valuable time. Remain blessed.